Okay, let's dive into this. Welcome, everyone, to today's explainer. We're taking a really fascinating look at the anatomy of an investment, specifically focusing on a comprehensive case study of Gas Malaysia Berhad. If you've ever wondered exactly how analysts evaluate a Sharia-compliant stock from both a technical and a fundamental perspective, well, you're in exactly the right place. We're going to completely break down the data, the charts, and the strategy that make up this company's financial profile.
Here is our roadmap for this explainer. First, ethical investing in Malaysia. 2, meet Gas Malaysia Berhad. 3, charting the bullish trend. 4, crunching the financial numbers. And 5, macro trends in future. We'll be using the technicals as the pulse of the company and the fundamentals as its blood work. All right, Section 1, ethical investing in Malaysia.
Before we look at a single chart or financial ratio, we absolutely have to establish the specific boundaries required by the parameters of this analysis. When we talk about a Sharia-compliant investment, we're referring to financial activities strictly guided by Islamic principles. To quickly de-jargonize this for you, it basically means the investment must be entirely free of riba, which is interest, and ghar, which means excessive uncertainty or deception. It also strictly prohibits involvement in any non-halal business activities. For an investor, this isn't just about profit. It's a structural, ethical filter that gets applied before a single cent of capital is deployed.
Now, in Malaysia, you don't have to guess if a company meets these strict standards. It is heavily regulated. The Securities Commission Malaysia acts as the ultimate authority here, screening and certifying listed securities. Gas Malaysia Berhad has officially passed this rigorous ethical test, which is exactly why it serves as the perfect, valid candidate for our investment case study today.
Moving right along to Section 2, meet Gas Malaysia Berhad.
To really understand the numbers, we first need to understand the business itself, its scale, and its footprint in the energy sector. This is not some overnight startup. Established back in 1992, Gas Malaysia has evolved over decades. Fast forward to 2025, and their scale is honestly massive. They're serving over 1,000 industrial clients, 2,000 commercial clients, and 22,000 residential customers. How do they pull that off? Through an incredibly vast natural gas distribution system that stretches roughly 3,000 kilometers across Peninsula Malaysia. And, as we're going to see a bit later, they're actively transitioning their business model for the future through their GM32 roadmap.
And this brilliantly illustrates their sheer dominance, an 84% market share in the industrial gas supply market by volume. Think about that for a second. When you hold 84% of a market, you aren't just participating in the industry, you literally are the backbone of it.
So, Section 3, charting the bullish trends. They've clearly got the market share, but what does the market actually think of them? Let's check the stock's current pulse and overall momentum. To ground our analysis in current reality, as of early 2026, the stock is trading at 5 ringgit and 32 cent. But obviously, a single price point doesn't tell us the whole story, right? The context around that price does. When we map out the key technical levels, a very clear long-term bullish trend emerges, one that's been firmly intact since late 2023. The stock just continues to form higher lows, signaling sustained investor optimism. Right now, it's sitting just above its 20-week simple moving average of 5 ringgit and 30 cent, which is acting as a crucial support floor. We've got another key support identified at 5 ringgit and 39 cent, and a major multi-year resistance ceiling up at 6 ringgit. The fact that buyers consistently step in at these support levels indicates a really strong, sustained upward momentum.
So the technical pulse is strong. The charts look great. But here's the question we always have to ask. Is the underlying business actually healthy? I mean, a stock can ride a wave of sentiment for a while, but eventually gravity takes over if the business isn't structurally sound.
Which brings us to Section 4, crunching the financial numbers.
This is the blood work of our analysis, where we strip away that market sentiment and look at the hard, fundamental ratios that dictate true corporate stability. The first critical metric we're evaluating is return on equity, or ROE. Let's quickly de-jargonize this. ROE simply measures a company's ability to generate earnings directly from the investments made by its shareholders. It tells us, quite literally, how efficient management is at taking your money and using it to create more value.
Let's look at their financial health report card here. That top line really stands out, an ROE of 26.30%. That is an incredibly strong figure. It basically means for every ringgit invested, they generate roughly 60 cent in pure profit.
It's so efficient, in fact, that it actually earned them the highest return on equity over 3 years award at the Edge Billion Ringgit Club. No small feat.
Next up, let's contextualize their dividend yield. Gas Malaysia is offering an appealing 4.49% yield, which slightly edges out its main comparable competitor, Petronas Gas Berhad, sitting at 4.12%. And this isn't an accident. Gas Malaysia has a formal dividend policy, committing to pay out at least 75% of its profit after tax to shareholders. It is a stock highly focused on consistent income generation.
Let's see how this builds into their valuation. The price-to-earnings, or PE ratio, is growing from an average of 14.57 in 2025 up to 18.18 in 2026. This upward trend reflects investors' growing willingness to pay a bit of a premium for each ringgit of earnings. It signals growing market confidence in the company's future growth prospects, while still remaining at a pretty moderate level that suggests the stock is fairly valued overall. Now, we also have to look at leverage. Their debt-to-equity ratio did increase a bit from 0.29 to 0.41. Why? Well, because they issued 200 million ringgit in sukuk financing, which is Islamic bond financing, specifically to expand their natural gas network. Even with this increase, their debt profile, sitting at a 29% gross gearing ratio, is highly conservative, especially for a capital-intensive utility company. They're successfully funding their growth without heavily over-leveraging the balance sheet.
And finally, Section 5, Macro Trends and Future. We've checked the pulse, we've done the blood work, but no company operates in a vacuum, so we really have to see how global and national forces impact the horizon of the stock. So the crucial point is how management navigates the macro environment. On the positive side, Malaysia's strong 5.2% GDP growth in 2025 drove domestic natural gas consumption up. However, they did face headwinds from slower global exports and shifting trade policies, which impacted their export-oriented industrial clients. But look at the mitigation here. Management successfully reduced overall expenses by 8.6% by capitalizing on lower average natural gas prices. They effectively insulated their margins against global slowdowns. And they aren't just relying on their traditional natural gas core moving forward. Looking at their GM32 roadmap, they are actively aligning with Malaysia's National Energy Transition Roadmap by expanding into biomethane, clean hydrogen, and advanced graphene materials. They're deliberately diversifying their energy portfolio to ensure they remain relevant in a lower carbon future. This whole transition is anchored by their mission statement, delivering best energy solutions for a better future. This isn't just fluffy corporate speak either. Their growing emphasis on ESG, environmental, social, and governance practices, is making the stock increasingly attractive to both Sharia-compliant investors and socially conscious funds. It broadens their investor base significantly. Pulling this whole shebang together, the report's conclusion is pretty clear. Based on the combined technical momentum and the incredibly strong fundamental data, Gas Malaysia Berhad represents a fundamentally sound, lower-risk equity option. It successfully strikes a really nice balance between providing reliable dividend income and offering steady capital growth.
But I want to leave you with a thought to consider as you digest this analysis. We've seen their past dominance and their rock-solid present numbers. But looking ahead at their new roadmap, does this traditional legacy utility truly have the agility required to conquer the massive global green energy transition? It's a truly fascinating question for the long-term investor to watch unfold. Thanks so much for joining me for this explainer, and keep learning.